This is a presentation on the weekly Silicon Valley real estate market conditions for the week ending May 30th at 11:59 p.m. These are the key chapters you can jump to in the YouTube description below. So let's get into the first data slide. This is showing the number of weekly sales. The weekly sales is shown in the purple. You can see we're down. That's to be expected because of the holiday. The number of new listings that were available the week before for people to buy last week were decreased because of the holiday. That happens every significant holiday. I expect this number will come up next week. But the general trend to look on here is the gray line. That's the typical marketplace. And we're now sort of past our peak season, which is basically the month of May, as far as the volume of transactions that are accepted on a weekly basis. You can see we go down, then there's a little bit of a bubble right at the October 1st and the September timeframe, and then we go down for the end of the year. So there's a very seasonal cycle to it. The blue line is the least number of offers you would expect based on the past 10 years. The red is the most you'd expect, and the purple is current data. Moving on, here's a summary slide. I've added a few new columns. Basically, the green stuff over here is comparing the metric to the 10-year median. Blue favors the buyer, and the red favors the seller. So if you just look at the left-hand side of the graph, you can see that compared to where Silicon Valley normally is based on the last 10 years, we are definitely in a buyer's marketplace. But then you have to come over and look at just the raw numbers, and they're way more balanced, and in fact, still mostly favor the seller. For example, you're getting somewhere around 5% overbid. It looks like maybe that's a little aggressive, but the amount, well, Silicon Valley overall, 5.9% overbidding. So for a seller to get almost 6% more than their asking price, you can't say it's a buyer's marketplace. 2/3 of the sellers are still getting more than their asking price. We've had basically 100% appreciation since the last 4 months of 2015. Those are significant numbers that you can't dismiss. 3/4 of the sellers are selling their properties in 29 days. So yes, Silicon Valley is cooler, favoring the buyers compared to where we normally are, but it's still an aggressive marketplace. Here now is the first typical summary slide. We look at inventory. You can see inventory is right up here around the blue line. So we sort of have the most inventory you'd expect. In fact, right now we're a little bit above. The most you'd expect is 3150. We're at 3250. So we have 100 more listings, more than you would expect if you were saying we were having a lot of inventory. Offers accepted, sort of the same concept here. We're pretty down close to the blue line, which would be a limited number of offers. We started off the quarter at 86% of the offers. We're now down to 80%. So we've lost 6% of the offers. We're only at 2,300. The least you'd expect is 2,100. So we're selling 200 more listings than you would expect in a very slow marketplace. The number of transactions that are actually closing has done similar to the offers. You've gone from 83% down to 73%. So you've lost 10% of your successful closings. We're closing only 2,050 transactions. Typically, the least you'd expect is 2,010. Typical is almost 2,800. So we're missing almost 25% of the marketplace, which is what this 73% says. We're missing 27% of the marketplace, or 26.6% of the marketplace. Now, looking at the speed of the marketplace, this measures the supply-demand balance, the number of sellers to buyer balance, and you can see that we're basically at 48 days, which, you sell out your existing inventory in 50 days. That's still pretty fast, but that's 56% longer than it normally is. So typical is down at 31 days, so basically a month, and we're taking a little bit over a month and a half to sell the properties right now. The slowest you'd expect is 40, which is why the purple line is significantly above the blue. We're slower than you would expect based on Silicon Valley's performance for the last 10 years, but it's still moving relatively quickly. And that's going to be the theme throughout this, and I don't know how to convey the concept more clearly. Days on marketplace is measured by 3/4 of the sellers, so this is the time that it takes 3/4 of the sellers that are successful in selling their home, so it doesn't count those that aren't successful. Quarter ago, we were at 14 days, which was 42% faster than normal. So it's almost twice as fast. And normally it would have taken about 28 days to sell 75% of your inventory. And now we're doing it in 14 days. But fast forward to present week, and we're at 26 days, which is actually 62% longer than it typically is. And it's actually longer than the longest you'd expect. The longest you'd expect is 22 days. So in Silicon Valley, as crazy as it sounds, we're used to selling all our inventory out in less than 3 weeks. And now we're saying we're approaching 4 weeks. Still very quick marketplace to say that you're selling everything under a month, but it's slower than Silicon Valley typically is. House price reductions. This sort of measures the seller's ability to read the marketplace. If there's a lot more price reductions, the market's either moving downward or sellers misread the market. Now, either one of those two would increase the number of price reductions. But a quarter ago, we were right at normal at 104%. Now we're at 225%. So we've picked up 125% of the price reductions. But what are those price reductions? Typically you'd expect only 0.5% of a price reduction. The most you'd expect is 0.7. We're at 1.1, which is why it's more than double the half of 1%. So the average price reductions is still only 1.1%. And that may sound like a very trivial number, but that's because the vast majority of sellers do no price adjustments whatsoever. And a lagging indicator versus a leading indicator is overbids. And the reason it's lagging is we need the sale price. And in order to get the sale price, escrows have to close. So that builds in a 4 to 6 week lag time. Plus I look over a 5-week period of time. So you're looking at data that's anywhere from 9 to 11 weeks back in the rearview mirror on where the market was, not where the market currently is. So there's a difference there. But right now we're getting almost 6% overbidding, 5.9%. Typically at this time of the year, we'd expect 7.7%. It's almost insane to say that we expect 8% overbids, but that's how competitive Silicon Valley real estate marketplace typically is. Right now, we're at 6%. Here now is looking at the 3 key indicators over a long time. We go all the way back to January 1st of 2015, and we're on a condensed scale through 2023. Starting in 2024, we go to a 2x date scale here, so you can see trends a little bit better. We have inventory up here in the purple right here, and you can basically see for the last 10 years, we're basically at record high numbers right now. Yes, we were a little bit higher at the end of 2018 and beginning of 2019, but we're pretty close to that level. That level will be up here at 150%, and I expect this number will increase. You can see how it was increasing fairly significantly up first quarter. Second quarter has been sort of oscillating around. Maybe some stock market uncertainty. People are deciding whether they want to try selling their home or not, but it's been bouncing more than it typically does. And then moving on to offers accepted. We're down here at 80%. It's been that way most of 2023, most of 2024, and now most of 2025. Once we had this bubble move through because of the pandemic where everybody's housing needs changed, we went from a surplus number of transactions to a lagging number of transactions. Why is that? Well, you pulled some of those transactions from 2023 through 2025 into 2020, 2021, and 2022 early. But also with the interest rates, a lot of the people that purchased back here and earlier refinanced their loans, and they're in a very low, attractive 3% loan. So it becomes more expensive than normal for them to move up. That sort of gives them an anchor to stay put where they are. But anyway, we're selling about 80% of the number of transactions we normally do, and that's about where we've been for the last 2.5 years. Moving on to the supply-demand ratio, days unsold inventory, that's up here at basically a record high number, which is a record slow number. So combination of the higher than normal inventory and the lower the number of offers gives you a slower turnover rate, and we're basically at about 155% of where you normally are. So that's a much slower period of time. You can see that is a record high, except for a short period of time right here. And I suspect that we'll turn around and come back up after we get through this holiday weekend. Although typically what you'd expect is for next week to see more offers. So that actually would put downward pressure on that number. Here's the active inventory compared to normal. So you can see how the latter part of 2024, we were right on the red line, which is a limited number of inventory for buyers to pick from. That's where we started 2025. We shot right up to get to normal levels of inventory. Then we shot right up. And by the end of first quarter, we were having a surplus of inventory, and we've been above the blue line ever since. And again, when you see these 3 lines, the blue line is the line that favors our buyer. So that would either be in the case of inventory, it'd be the 90 percentile. In the case of offers, it'd be the 10 percentile. The gray is the typical, right, the median, right where you'd expect the market to be. And the red is the line that favors the seller the most. And in the case of inventory, that would be limited inventory. So it's 10% inventory. For offers, it would be 90%. And the green line is where I do the x-axis, the date axis, 2x to show trends. Now we're looking at the same information on a percentage basis. And you can see compared to normal, the only time we had more than normal was right at the end of 2018, beginning of 2019. And that's significant because that's a time when you have very limited inventory. So if you just have a little extra inventory, it's a larger percentage. Right now is sort of the time when you have the maximum inventory. So the fact that we're at record high at maximum inventory really indicates that we have a fair amount of inventory out there. Offers accepted over the past 5 weeks, we're right here. We're getting pretty close to the blue line, but we are above the blue line. We're sort of following the blue line. Again, the gray line is the typical line. So you have a little bit more offers accepted than the least you'd expect, but significantly fewer than where you'd expect to be, because you'd expect to be up here and you're basically just past the peak. So maybe you'd expect to be somewhere around 2,800 listings. Here's on a percentage basis. So you can see that we're right now approaching the 80% level. That's where we've been. You could actually say that 2023, right after the 2022 price correction, we were down at 70%. Then 2024, we were mostly at 80%. And now we're again, look like we're going to be leveling off at 80%. Obviously, there's periods of time right at the end of the year when you were down to 70%. And also there was a period of time just a few weeks ago where we were up at 90% and looks like we were going to continue to climb. Here's the days of unsold inventory compared to normal. So you're way above the blue line. So you're slower than you'd expect to be. Your turnover rate is longer. It's taking longer to sell out your existing inventory. This is sort of like a loaf of bread on the grocery shelf. How quickly does that loaf of bread turn over? So it's not necessarily every transaction turns over, but it's when at the current rate of sales, how long would it take to sell through your existing inventory? And, you're still under 50 days. You can see that for the vast majority of the time, Silicon Valley is below 60 days. On here, we really never got above 70 days. We have had numbers in the 300s for very short periods of time back around 2007, 2008, and 9, right in there somewhere. Here's the Silicon Valley versus normal. So you can see that we've had short period of time right here where it was normal. But what was that caused by? That was when we were shelter in place and couldn't even show property. So again, you're slower at 155% of your turnover rate. Here's marketing time. This is the length of time that it takes 75% of the sellers to sell. You can see we're still very reasonable number, 26 days, but you can see how it's been climbing, and you can see how we went from a faster turnover rate midway through first quarter. So essentially 13 weeks ago, we were down here and selling out everything in about 13 and a half to 13 days. And then we went up here and we're now at 26 days. So we basically doubled the marketing time in the last 13 weeks. Here's compared to normal. And when you do it on a percentage of normal, you're way up here at 162% or something like that. And except for the shelter in place period of time, and that was only for part of that period of time, was at a slower marketplace relative to normal. Here's the largest 10% of the sellers. What are they doing on price reductions? So because the vast majority of the sellers do their homework and price their home correctly, they don't make any price adjustments whatsoever. 90 percentile seller, the seller that's taking the 90th percent price reduction. If you go from the highest percent price reduction to the lowest, come down 10%, how large is that price reduction? That particular seller is taking about a 13% price reduction right now. So that's pretty significant. If the typical home is $2 million, 13% is $250,000. That's pretty significant for the seller that took that reduction. And there are sellers that are taking that reduction. In fact, there's 10% of the sellers that are taking larger price reductions, and there's 90% that are taking smaller. And out of that 90 that are taking smaller, the vast majority, probably 80%, are taking no price adjustment whatsoever. Here it is on a percentage basis. So here you're 45% more price reduction than typical. And this is the magnitude of price reduction. We'll move into average next. I like the 10% number. It's a weird number to follow statistically. So I'm including the average seller price reduction just so that people can see the trends the same. You can see midway through first quarter, we were up here and taking only half of 1% price reduction. And now we're down here and taking 1.15%. clearly it's been larger and larger price increases. And even, you can see in a typical marketplace, that's fairly normal for sellers apparently to overestimate the marketplace at this time of the year and then have to chase the market down. Here's comparing that average reduction to normal. So you can see we're down here and taking larger price reductions than we normally do. It looks like I don't have the scale on here and I don't know what the scale is. I'll try to bring that scale back. But you can see that we went down and now we've actually improved and we're taking a little bit less price reductions, although more than you typically would expect. Typical would be right on the gray line. That's your normal expectations. So when you're down here, you take larger price reductions. When you're up here, you're taking least price reductions. You can see the least price reductions was basically early in 2022, somewhere around March the 1st of 2022 would have been this peak point here. It's a little bit past halfway. Halfway would have been Valentine's Day. Here now is looking at the frequency of price reductions. So right now you're sitting here and only having about 17%, 17.5% of the sellers doing price reductions. That means that 82.5% of the sellers are doing no price reductions. So I wasn't far off when I was saying 80%. But you can see how dramatically that changed. And I've also pointed this out in previous presentations. The shift happened a little bit earlier at the end of the year. Normally it's a couple weeks into January, and it happened in the last week in 2024. We got down here and hit the bottom, and we hit the bottom right around Valentine's Day, where normally you're not hitting the bottom until April the 1st. And we've been climbing ever since. Whether this will continue to climb, typically it continues to climb because you can see the gray line. So the frequency of the price reduction sort of bottoms out, typically based on the past 10 years, right at that end of the first quarter, beginning of the second quarter, and then it happens more and more frequent for the balance of the year. Here's on a percentage of normal, so it's 80% almost more than normal. So clearly, it's more frequent than you'd expect it to be. Not quite record territories, but getting close, within 10%. Because if you take 10% more of 180, you're at 198, which would be right up here. So maybe 15% more, and you'd be setting record high frequency. That means the number of sellers that are doing a price reduction. It's not one seller taking 10 price reductions. That would only count as one. It's the number of listings that take price reductions. This is the magnitude of overbidding, and this is the median. So this is the lower number. The number we saw before, which I believe was 5.9%, it's the average overbid. So the median overbid, where half the buyers bid higher than 3% over and half bid less than 3%. So half your total offer population in Silicon Valley is paying 3% or more above the seller's ask price, and only half of the offers are going below 3%, which is still could be above 100%. And you can see for very little period of time, does the typical buyer come in under the seller's ask price here in Silicon Valley. We have a very unique marketplace, and I don't know if anywhere else in the world that's like Silicon Valley. Here is the magnitude compared to normal, so you can see that you've gotten 2% less overbidding than normal. So even though it's normally at 3%, normally it's up at 5% overbid at this time of the year, and I think the average overbid was 7.9% overbid. Here's the frequency of overbidding. So again, you're somewhere around 65%, just shy of 2/3 of the sellers are getting more than their asking price. You can see that peaked out a little bit before first quarter. And again, overbidding requires sale price. So this is lagging behind. So this peak really happened 5 weeks earlier than that. And then probably 2.5 weeks earlier than that, just because of the way I gather data. So probably 7.5 weeks prior to the end of first quarter. That's basically the middle of the quarter, which is right around Valentine's Day. And that's when the market peaked in 2022 and where I think the market peaked in 2025. Here's compared to normal. And you can see right there is the peak frequency. So this is how common is the overbidding. And again, this is lagging. So this would almost suggest the maximum overbidding happened, almost on January the 1st. And then it's been coming straight down ever since. And we're now below 90%, somewhere around 87% of the amount of overbidding that you'd expect. So we're missing about 13%. Here's just a little price model, and you can see that we have rolled over and the prices are starting to come down now. And that does not necessarily mean property value. If you've had a shift in the marketplace where loans became harder to get, that would tend to raise your median price because it's the buyers at the lower end of the price point that tend to need loans where your more expensive homes tend to be stock investors and things that are previous sales of homes, and they're not dependent or as dependent on loans. Here's days on marketplace. This is now a weekly distribution. We have the purple line, which is the current line. The dotted line, which is where we're starting off, is a year ago. And the concept here is to look at what happens. See, you got a step up 1 week right there. There's exactly a year ago, 52 weeks ago. And there's 51 weeks ago. So, and it's going up towards the blue line. Now it's automated and go through, and you can see that I was expecting that to be automated. I played around with it and blew it. There's about where we start leveling off for the summer, and it was actually here on August 30th. So now, and basically 5 weeks before that would have been basically July 1st, June 30th. It's sort of where you sort of get the summer doldrums where you're just really not changing. You're just sort of bouncing. Now you're already starting to slow down on November 8th. You're slowing down for the end of the year holidays. Now you're approaching the peak. One of those two, either the 20th of December or January 3rd, is the slowest marketing time. And then you rapidly accelerate. And also notice the slope of the line up here changes and becomes steeper. That's an indication of listings that have been on the market for a long period of time starting to sell. We go stepping through. Now we're getting very close to the bottom. This is Valentine's Day of this year. Notice the yellow line in relative to the green solid line. You can see the green solid line is higher all through here, and then it flips over, and only right up here is it lower. And again, that's because these are the sellers that have been on the market for a long period of time. So I would actually say this is the hottest point in the marketplace on February 14th, and the green line there is slightly cooler. Yes, it's hotter up here at the very top end, but it's cooler down through here, which is where I think it counts. And then you start cooling off every week since. So where are we getting to right now? The purple line's coming up right there. I would expect this to continue to go up. We're going to hit that period of time where it just basically bounces, and then we're going to have the end of the year slowdown. Here's the largest price reductions. So this is all the price reductions. And the reason I call it largest, I go all the way up to the 97th and a half percentile seller, but I only go down to the 82.5 percentile seller. So I'm only looking at 15% of the marketplace, shifted down 2.5% to get rid of statistical errors. Someone unfortunately reports the price incorrectly, or, adds an extra zero when they're listing the listing, and then they have to do a price reduction to correct their error, because we don't have an ability to distinguish between a price reduction and a data entry error. In fact, I manually go through the data and try to catch them. And it is a pretty significant task to do so, because I'm using about 25,000 listings to produce this data set. And for example, this particular week, I missed one listing in Concord that I had to go back and manually adjust the data for, because it was listed at the sale price was 100 times higher than it actually was. Okay, so let's step through the same concept. So right now, this is dotted line up here is where we were a year ago. So you can see the market was significantly hotter because there was fewer price reductions across the entire distribution. The purple line is where we currently are. And so from there to there, the market cooled off a little bit, and then it continues to cool off. And there's some summer bounce. And now we're getting into the cool down for the year. That was a big cool down. And now right at the end of the year on the 20th of December, and then you get into January and it starts going up, rapidly accelerating. There's the peak. So you got that line there or that line. I'm going to leave the dotted line up because now you can see the green line. So the green line is a little bit higher here, and then all this is identical. So I'm going to actually call that the peak of the market on March 31st. Now, keep in mind, this is when we were taking the least amount of price reductions, and it takes a while for the sellers to adjust to the change in the marketplace. So if they start taking more price adjustments on March the 7th, I would say that the market turned sometime before that. Here we go now, continuing down. And there we are in current day. So you can see that, from the green line to the purple line, it's still cooling off by quite a bit. So we're seeing increasing price adjustments. Now, We're nowhere near the worst we were, which was basically back here on November 27th, 2022, after the price correction, but we're also not up where we were just a year ago, which is the dotted line. Now we're looking at overbidding, and this is going to be, again, a lagging indicator. So shifts that happened around Valentine's Day are now going to happen around the middle of March and April 1st. Shifts that were happening around November, beginning of November, are now going to happen around the beginning of December. So same concept. Here's the dotted line is where we were a year ago. Purple line's where we are. So we're significantly cooler, less overbidding across the entire distribution. Because basically here I'm showing every listing. I'm going from 5% up to 95%. So I'm showing 90% of the transactions in Silicon Valley. I'm only throwing out the extremes to get rid of mistakes and errors and that kind of stuff. And it tends to get steeper and less readable. So you can see the market getting cooler from this week on. And now there's the summer doldrums that are now happening at the end of August instead of earlier. And now I'm not expecting the change to see the change normally happen here on November 8th for the other data, and it really hasn't happened. Now it's starting to happen December 20th, and it continues to happen. And that's in fact the low point here on January 31st. And then it starts to heat up in February. And then right here is sort of the peak of the marketplace, March 15th, March 29th. And if the typical escrow is 5 weeks, that's putting you back sometime at the end of February. And then the market's starting to cool off every week since then. And this, again, is the current week. Now what we're doing is breaking down Silicon Valley into 3 counties. We have gray being Alameda County, blue being Santa Clara County, and orange being San Mateo County. And right off the bat, San Mateo County has more inventory than it's had any time in the past 10 years. It's a little over 600 listings. Alameda County is basically right at its previous peak, and Santa Clara County is still lagging behind its peak, which would be these 4 years back here. And yes, 2017 was a weird year for Silicon Valley, and you can see that showed up in the lack of inventory. That was basically the year where we had double appreciation. We had the normal appreciation in January and then a second round in August, and then we had a slow period in the following year, 2018, to make up for it. Here's offers accepted. So even though Santa Clara County had less inventory than Alameda County, it's got more offers accepted. So clearly it's going to have a faster turnover rate. And San Mateo County, even though it had the highest record high volume of inventory, it does not have a record high volume of offers. So it's going to have a longer than normal days unsold inventory. Here's the days unsold inventory. So if you go back before the pandemic, San Mateo County was typically the fastest. See how the orange is on the bottom? And then the gray was Alameda County was more often than not on the top. Right now, Alameda County is still on top, but San Mateo County is in the middle, and Santa Clara is the fastest of the 3 counties currently. There seems to have been a shift in the centerfold of the real estate marketplace from San Mateo County into Santa Clara County. Here's marketing time for the 75th percentile. So 3/4 of the sellers are selling in less than 28 days in Alameda County. I'll call San Mateo and Santa Clara County a tie at 24 days. So Alameda County is the longest marketing time. Now, when you come down to price reductions, Alameda County is doing the largest price reductions, then Santa Clara County, and then San Mateo County. So San Mateo County is doing the least amount of price reductions. Frequency of those price reductions, Alameda County, the most frequent at 20%, Santa Clara County at 16%, and San Mateo County at 13.5%. Overbidding, very close together, close race here between Santa Clara and San Mateo County at somewhere around 5% overbidding. But now notice that Alameda County is up here at 7.5%. It's getting the most overbidding, even though it had the longest marketing time and the slowest days of unsold inventory. You would not expect that. It's also got the largest price reductions. How do I reconcile these apparent differences? I believe what's going on is sellers in Alameda County are taking price reductions that overshoot where the market actually is, causing the buyers to come out of the woodwork and bid the price back up to where market value is. So even though they have longer marketing times, they're having more frequent and larger magnitude overbidding. This is the frequency of overbidding, very similar to all three, but you can see the gray line is behind the blue line. So I think Alameda County is beating everybody out by just a little bit. In fact, if I wanted to put numbers on it, I'd call it 66% for Alameda County, 65% for Santa Clara County, and 64% for San Mateo County. All very close together, all just shy of 2/3 of the sellers getting higher price than their final asking price. Here's the long-term appreciation since 2015. You can see Santa Clara County up here has the most appreciation at about 125% appreciation, which is pretty significant. San Mateo County and Alameda County are both down here around 80% appreciation. Here's the pricing. You can see Santa Clara County came out on top this week, and San Mateo County is a little bit lower. I think the numbers are something like 2.2 for Santa Clara County and 1.120 for San Mateo County. I'm pretty fuzzy on those exact numbers, but I think that's what they were. And then Alameda County is the more affordable area down at about 1350. Here's the same information on regular paper, and you can see that a little easier to read. Santa Clara County is probably at 2150, and San Mateo County, it looks like it's at 2080. I thought it was 2120. Here's your monthly payments going through a mathematical formula, assuming an 80% loan at the Freddie Mac high balance conforming loan limit, which is actually higher than jumbo money. So these payments are going to be on the high side. Also, a lot of buyers in Silicon Valley have assets left over and can get relationship pricing on their mortgage with an institution. Here's the micro market areas. Clearly, you can see the vast majority of Silicon Valley is blue in color, which says larger than normal inventory. Saratoga Los Gatos is the only area that I'm seeing that has any pink at all at 83%. So it's got a little bit of shortage of inventory. Here's looking at the offers accepted. Everybody's blue or white in color. I see no red whatsoever. The highest number I'm picking up right now is Cupertino at 106%. So they have 6% more offers than they typically do at this time of the year. Speed of the marketplace, turnover rate. Again, everybody's blue in color. And this again is going back to comparing it to the 10-year median. We had that summary slide at the beginning. Here, longer days. This is the time for successful sellers to sell. Clearly taking longer than it does compared to the 10-year median. Here is ask price reductions, and this is the magnitude. Fairly blue, but we got some white and pink up here in San Mateo County, and then also some fairly significant bright red over here in Half Moon Bay. And for those that have been following for a while, not too many weeks ago, Half Moon Bay was solidly blue, not on price reductions, but on other indicators. I think the buyers are now feeling that the prices have come down and are a good buy, so they're going over there and are taking less price reductions currently than they typically do based on the same week. Here's the frequency of price reductions, a little bit more mixed. You got some white here in the Silicon Valley and then even up in Alameda County, but a fair amount of blue, more blue than red, but you still have a fair amount of red again in San Mateo County, which would say that price reductions are less common than they typically are for this time of the year. Turnover rate, days unsold inventory. Now this is just raw numbers. So even though those last group of slides was really blue, this is really pink. And this is just saying raw numbers. So to sell out your total inventory here in 48 days for Silicon Valley, 42 for Santa Clara County, 48 for San Mateo, and 55 for Alameda County, that's a fast-paced market. Most of the country measures days of unsold inventory in terms of months, and they use 3 to 7 months to be typical. We don't have anything other than Castro Valley, Pleasanton, and Atherton that are anywhere in that league. That's why I use days and not months. Here's the time for 3 out of 4 sellers to sell. You know, you got some areas here in Los Altos, Cupertino, Sunnyvale, they're still selling out in, well, not selling out, but 3 out of 4 sellers are selling in 2 weeks. Almost everybody is selling in less than 4 weeks. To go on your market and sell in 4 weeks is a fairly fast-paced marketplace. Slower than we're used to, but still fast-paced. Here's ask price adjustments. You can see that this is coming in with a shade of blue. So we are seeing more price reductions than we typically do. The highest one I'm seeing is down here in Oakland at 2.1%, but the vast majority are more just over 1%. In fact, the 3-county average, 1.3% in Alameda County, 1% in San Mateo County, and 1.1% in Santa Clara County. Here's the frequency of those price reductions. So very uncommon. I mean, a lot of these are in the low two digits, 16%, 13%, and 20%. Those are very reasonable numbers. And 20%, you can see the blue showing up here in Alameda County. Here's the buyer's overbids. And this is the average overbid, not the median. I flip and do different numbers different times, but 5.5% is your average overbid for Santa Clara County, 5.2 for San Mateo, and 7.5% for Alameda County. So again, even though Alameda County had the slowest turnover rate, it has the most overbidding. Here's the frequency of overbidding, basically right at shy of 2/3 for all of Silicon Valley. You can see that it's very red. Anytime 2/3 of your sellers are getting more than their asking price, you have a hot marketplace. Here's the appreciation. The areas that are blue have had the least amount of appreciation since 2015. The areas that are red have had the most appreciation. Here's the sold price, and instead of following the median number, which is the middle number, I sandwich it by putting in the least expensive home and the most expensive, so you can have a price range in each one of the geographical areas. And here again is the summary chart. So again, you can see that when you compare to normal, Silicon Valley is blue, which favors the buyers. So the buyers are having a better year than they typically do, but yet the market conditions themselves are still fairly favorable for the seller. Here's volume of transactions. We are the second worst year out of the last 25 years. The 2 years that were worst were the pandemic and 2023. You can see that we were slightly less than we were last year, and we will probably drop down below last year after we have transactions fail. Here's your raw numbers for Silicon Valley, Santa Clara, San Mateo, or Alameda counties. You can look at whatever metric is most valuable to you. One of the key ones is days of unsold inventory is increasing and increased significantly in San Mateo County. None of them are approaching the 5-day warning bell level, 5-day change in a 1-week period of time. Everything's still fairly reasonable. You're taking 2 weeks to sell the median number, the midpoint of your listings. The number for 75% is also presented down here at 3.5 weeks. This is your list price reductions. You can see they're basically hovering right around 1% reduction. And you can see the overbids and whatever specific thing that interests you. We have been talking about the Silicon Valley real estate market. We will be talking about the Greater Bay Area. I'm Richard Calhoun, real estate broker with Creekside Realty, working with single agency transactions here in the Silicon Valley area in Santa Clara, San Mateo, and Alameda counties. I appreciate likes and subscriptions. The blue YouTube up here is the archive. You can type in the shorter green root URL. It takes you to the same place. If you want to join the presentation live Saturday morning at 9 a.m., you just type in the green root URL in 2025, and that will take you to the meeting via Zoom. If you want a specific handout, you type in the green root URL, the letter H for handout, year, month, date code. So for today's would be 2025-05-31. And I got it posted almost a full hour ahead of time. And then the specific episode, just the green root URL, the year, month, date code. Let's move in and talk about the Greater Bay Area now. Here are the 5 regions. We have been focused on Silicon Valley. We also have the cities, North Bay, Central Valley, and Central Coast. Here is the active inventory. You can see active inventory is increasing in all the areas. You can see that they all did a little dip, except for the blue one down here being the Central Coast. Silicon Valley did the biggest dip. Here's the number of offers that were accepted. You can see they all did a little bit of a plateau. The biggest plateau is Silicon Valley. It almost seems that Silicon Valley is more sensitive to things like holidays. They all leveled off to some degree, and next week I would expect them to continue to climb. Days of unsold inventory, the speed of the market, Silicon Valley is the fastest. Cities, Central Valley, North Bay, and then the slowest is the Central Coast at almost 100 days to sell your inventory. But we need to keep in mind that would be still a fast-paced marketplace for almost the balance of the country, because 3 to 7 months would be 90 to 210 days. And here you're basically at something like 97, I'll call it 98 days in Santa Cruz, and that's by far the slowest. The fastest is down here in Silicon Valley at something like 47, 48 days. Here's your marketing time for 3/4 of the sellers to sell. Notice the significant dip in North Bay. That's a little bit unusual for such a large area, but generally climbing in all the areas. What might have been unusual is the spike up the week before. Here's the seller's average ask price reduction. So these are going to be very small numbers. You can see that the cities and Silicon Valley are just over 1% price reduction. Then you have North Bay and Central Valley close together at about 1.6% price reduction. And then the most price reductions is Central Coast at about 2.1% of their original ask price is reduced in order to get the offer in the door. Here's the frequency of the seller price reduction. So even though Central Coast took the largest price reductions, they're in the middle of the pack as far as the frequency. The most frequent price reductions is going to be the Central Valley, with almost a third or just over a third of the sellers taking a price reduction. The least is down here at the cities at something like 15% of the sellers, 1 in 7 of the sellers taking a price reduction. Here's the magnitude of overbidding. You can see the magnitude of overbidding has been dropping in Silicon Valley. Cities has been pretty flat. North Bay has been dropping a little bit. Both the Central Valley and the Central Coast are below 100%. So the buyers are coming in under the seller's ask price typically in those two regions. Frequency of overbidding. So cities is the highest. You can see it's been bouncing. It's a smaller number of transactions, so you have more bounce, but it's been bouncing more here than it typically does. And that's, I'm not making it bounce by moving the cursor. The line's actually already cursed. The data's they're jumping up and down, and I'm just trying to show it with the cursor. Silicon Valley peaked out at about 74% and rolled over nicely, and is now down to about 65% of the sellers are getting more than their asking price. And the area with the least amount of overbidding is the Central Coast at somewhere around 36%, and a little bit more than 1/3 of the sellers are getting an overbid. Here's the long-term appreciation. The cities has done the least well since the pandemic. You can see before the pandemic, it was right in there with the middle of the pack. And then here, 2020 is the pandemic. And basically by July 1st, it was at the bottom and has been at the bottom ever since significantly. And Silicon Valley sort of was on the top most of the time, but continues to be at the top and now is significantly on the top with the most appreciation. Silicon Valley overall has got about 97% appreciation. Santa Clara County had the most, and I think it was 125%. Alameda County, I think, is what really weighs down Silicon Valley. Then you have Central Valley at 90% appreciation, Central Coast at 90%, North Bay at 70%, and then again, as I said, cities doing the least well at 56% appreciation. Still fairly decent, but clearly Silicon Valley is almost doubled the cities. Here's the long-term pricing. You can see that the cities is basically at record high, except for the very peak back here in 2022. Silicon Valley has come down, and so it's a little bit below its 2024 peak and a little bit below its 2022 peak. Central Coast is basically right at its peaks. All the other three are basically the same. North Bay right at its peak, and the Central Valley being fairly stable and also right at its peak. Here's the monthly payments. Going to be in the exact same order. It's a little more bouncy because of the interest rates impacts the payments calculation, but payments are actually probably more important than the actual price, because the payments are what the bulk of the buyers qualify for. And here's the raw numbers. You have the current week, you have the week ago number, the change from a week ago, the change from 5 weeks ago, key indicators, then the lagging indicators, because you need sold price, and obviously finally the sale price. And with that, we're back to the chapters. You can jump to the section you find most interesting for what it is you're trying to do. I appreciate your time and see you next week. Bye for now.